Hello and welcome to the December 9th, 2009 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Well, today we feature IGT, International Game Technology. This is a $5.4 billion technology company that designs, manufactures, and markets electronic gaming equipment and systems products worldwide. If you take a look at the chart, you can see that we've got a pretty nice uptrend that has been in place for several months, but notice it's been rolling over recently. The big breakout on the stock occurred back in the third week of July. You can see this big breakout, this breakaway gap with some very nice volume to the upside. That took out a previous high back in early June, which then set the stage for some decent support, because ceiling, resistance is a ceiling, and once you break through, that ceiling then becomes your floor or support. And you can see back at the end of October and early November, IGT came right back down to the 1770 area and then reversed back up, went up, tested the 50-day moving average, and has come back down. Now, we've seen some pretty decent volume the last couple of days, 2 of the last 3 days, when we've tested this support level. I like the reversal that we saw on Tuesday on IGT as it reversed back up, finished close to the high of the day after breaking below the support area intraday. So that to me signals that we might be ready to at least see a short-term move to the upside. I might look for about the 20-day as an area where the stock could run initially. So for those of you who like to trade quickly, I would maybe look at that 20-day, which right now is at $19.17, and it is declining. So keep an eye on that 20-day. That may be the area where you experience some resistance initially, if in fact we do get that bump to the upside. To the downside, we're pretty close to the support area, right around 1770, 1780. Anything below that level, especially on a close with increasing volume, would make me very nervous. Otherwise, I would expect it to hold and to bounce from here. I do want to point out, though, notice that in this move back in May when we went straight up, you can see the volume really pouring in. Again, at the end of May into early June when we broke out, you can see very nice volume here. Then again on this gap up, this breakaway gap, you can see very nice movement here with volume. But notice as we got up in here to late August and then into the early to mid part of September on these highs, take a look at volume. Volume has totally dried up. This is something that you could take a look at in your stocks as they make breakouts to the upside. You always want to make sure that your stocks, if they're breaking out, are confirming with nice volume. When they start to break out with lesser volume, and especially when you start seeing these breakouts with lower MACD readings, that in combination with light volume can be the kiss of death, and that's when the stock simply runs out of buyers and you start losing that momentum and the stock rolls over. So keep that in mind as you're trading in the future. When you have a stock that's doing some really good things for you to the upside, really watch that volume, watch the divergences, because when they start to turn against you, that's one of the signs when it's time to get out. I hope you've enjoyed today's presentation. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter. It's a great newsletter, and with that subscription, we'll email you the chart of the day every day. Happy trading.